Hello traders, Gary Wagner with the Gold Forecast here. It is Tuesday, it is October the 19th, and this is the Daily Report. Gold under significant pressure this morning, currently trading down roughly $33 to $34. When we break down that price change, that $34 price change, over 20 of it is due to predominant selling, and a strengthening of the dollar is giving it another $4 move. Very, very interesting activity in the marketplace, and I want to get right to the board. Of course, last Thursday, for my daily followers that do listen to this every day, we talked about the fact that when I drew in this Andrews Pitchfork, and the Andrews Pitchfork is a beautiful tool to give me upper level resistance lines, we noticed that when the market hit this top line, this is our wave 3 right in here, and what we did notice is that when the market took this brand new high, this 1288, we did see some resistance. In fact, during the day itself, this particular candle here, this black candle right in here, became a shooting star. Now, when it finally did conclude, the candle and the pattern that we saw itself was that engulfing bearish. So the engulfing bearish on Friday is really the pattern that caused me to take a serious look at pulling profits on the position that we had when I considered that we were at record territory. We came off of this resistance line very hard, coupled with the engulfing bearish. I did go ahead and I recommended that we cover. We, of course, are flat in the market right now. For those who took that, we got out roughly at 1365. On the following day, we have this doji character. In other words, through the day, it became confusing because at some points it was a lower closing day, it was a black candle. At some points it was a higher closing day, a red candle, as you can see by the high and the low. Today we got the absolute confirmation that we've been waiting for. We in fact did hit a retracement, a fairly sizable one, and we are now in our corrective wave 4. Now, in terms of where the market itself currently is and where I would look for it to find some support, I really need to work with, as I said, Fibonacci retracement. That seems to be one of the better tools that we have to actually calculate that. So what we do is we look to see how the market reacts at certain Fibonacci levels, and what I like to do is therefore look for particular candlestick patterns that are going to be what we call a bullish reversal pattern at those points. So let's take a look at those points. Of course, the first level we want to look at is 23%. And as you can see, it did touch very, very close to this 23% level in terms of retracement, but it absolutely broke through that today, and that is no longer any kind of support. In fact, if anything, it might be resistance later on, but it's certainly not support. So then we come to our next level, what I consider to be the most logical level, which is going to be 38%. On a shallow retracement, 38% is a good typical retracement for a wave 3. Interesting though, we are right there in terms of our current price, not our close, but our current price, and so that this in fact might be the dip and the bottom of the dip that we're waiting for. As you can see, we seem to have some good superlative support right in this area. However, traders, we don't really have an indication right now, any kind of a candlestick pattern that's going to give us that, because of course this sell-off right now has occurred in one day. What we would want to see on something like this is, because let's assume of course that the market closes in this area, and then on the following day we get that red candle, that's going to be the first thing that's necessary for a reversal signal. This would give us that inside trading day. This would give us a what's called a piercing line, as long as it was midpoint or better, and an engulfing bearish, of course, would engulf like that. I don't think we're going to see that kind of activity. But if, for example, we were to see something like this, where we, of course, we've drawn that in, but something where this following candle right in here was a red candle and began to trade within the midpoint of that prior black candle, that 2-day pattern known as a piercing line is something that we would want to pay attention to. And for most conservative traders, we would enter it on confirmation. Confirmation would be another red candle with a higher high, a higher low, a higher open, and a higher close. Traders, we are looking at a weekly chart of spot gold, forex gold, and as I have talked about on many occasions, although you cannot trade off a weekly chart, it's beautiful to be able to step back, and it gives you a real solid indication of what's going on with the market. When we had this solid uptrend, these waves 1 and 3 to the upside, you can see we just had a series of higher closing weeks. I also talked about the fact that at most of the tops, this is that 1221 top, the first historical high. If you look at any of these tops, the shooting star here, the engulfing bearish here, another engulfing bearish here. This is that Three River Evening Star, and of course, the hammer signifying the bottom of the market in our weekly right in here. You'll notice something very interesting, and that is for the first time on a weekly chart, we actually do have a pattern that is a bearish reversal pattern. Same one we saw on Thursday in the daily chart, we are now seeing in the weekly chart. And this, of course, is an engulfing bearish line. Now, does that mean that we will see, of course, follow through and a continuation to the downside? Well, it's much too early to tell. We haven't gotten any significant indications that it's stalled, except for the fact that it's resting on what I consider to be a fairly critical Fibonacci level on our daily chart. And you can also see that there were points in which you got that round of profit taking only to have the market follow straight higher. In other words, you didn't get that confirming week the next week. Also, this week is drawn from Monday and Tuesday. It could certainly change, and we could end up at the end of the week where it's not an engulfing bearish. So we're going to have to see, of course, how this weekly chart develops. But I did find it interesting. I wanted to take a moment and really thank many of my subscribers who emailed and contacted me and called me the other day. You know, this is forecasting at its most difficult, and forecasting with the greatest amount of joy. And when we get these markets right, of course, we feel good. And whenever we make any kind of play, at least myself, I always go back and review, be it right or wrong, to see what can I learn from it, and how can I teach myself to be a better trader and a better forecaster. And I had questioned the call of pulling profits the other day because we saw the market moving up a little bit. And I had a lot of email and telephone calls that came in letting me know that they felt it was the correct call. I greatly appreciate that. And in hindsight now, when we look at the fact that we got out, that we looked for a top, we did in fact call the absolute top of the market. We got out at a very solid place right in here. I personally think that we did as good as we can do. We called the top of the market, we pulled profits, we got out, the market's down. Now, it's a new day, it's a new trade. I'm going to look very seriously at how this market reacts at this 38% level. If we get any kind of bottom indication, we want to be buying this dip. We just want to be cautious about where we do it and when we think this market itself has finished its retracement or correction. I'm absolutely still bullish, and I'm absolutely still under the belief that these original projections that we've put up are going to have an opportunity to come into fruition. And as you can see, it has been following on track very, very strongly. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow. Bye-bye.